Hey guys, welcome back, and today in this video we're going to go over the two best indicators that you can use in order to trade in gold. And in this video we're going to go over the exact strategies that we use for profitable trading in gold and how these supply and demand indicator and order blocks indicator works. And also we're going to go over what are the advantages and what are the benefits of using these indicators while trading in gold. So first of all, let's go over the supply and demand indicator. And if you have gone over our content related to supply and demand, you must know that there are four types of supply and demand zones. There is a rally-based rally and drop-based rally demand zones, and after that there is a drop-based drop and rally-based drop supply zones. So if we look at the chart closely enough here, we can see the formation of a rally base drop supply zone, because this is the rally candle, then these are two base candles, and then this one here is a drop candle. So this is a rally base drop supply zone, as we can see it more clearly here. So the supply zone will be at the high and low of this base region or base candle, and as you can see we have detected this supply zone manually, but in order to save time and also get to be notified in real time, you can also use our supply and demand indicator. As you can see here, as soon as I applied the indicator started to show me all the supply and demand zones that are available in the market. So the indicator will notify you as soon as any supply or demand zone is formed inside the market, and I'll put the link to this indicator in the description of the video, so make sure to check that out if you're interested. And here we can see the indicator pointed out that there is the formation of this rally, base and drop supply zone. So the strategy for trading a supply zone is we will put our stop loss at the high of this supply zone and our entry at the low of this supply zone. Okay, so as we discussed, that the supply zone will be drawn at the highs and lows of this base region. If I go ahead and just replay the market, we'll be able to see the formation of supply zone in real time. So here you can see that there is the supply zone, and the supply zone is drawn at the highs and lows of this base region. So we'll put our entry here and our stop loss at the high of this supply zone. So now the only thing remaining is to determine where should we close the trade or exit the market. One thing that you need to understand while trading with supply and demand indicator is that you should break even your trade as soon as the risk to reward ratio of 1 gets complete. So if we go ahead and take the short entry here, and here we can see that there will be our stop loss, and the first target that we're gonna wait is at 1:1, and we can see that this target was achieved here. So we will break even the trade as soon as this happens, as soon as the risk to reward ratio of 1:1 is complete, and after that we'll wait for the market to move in the bearish direction. So the only thing remaining now is where should we close the trade, and in order to determine that, we use the indicator that is called the psychological TP levels indicator. And if I just go ahead and apply the indicator here, let me just go towards the indicator. So it's psychological indicator, psychological TP levels indicator, and as soon as apply the indicator starts to show two areas. The two areas are this green area and this red area. Now this psychological TP levels indicators is used to determine the take profit levels for supply and demand zones, and you can also use this in other strategies. So we made this indicator in order to overcome your psychological fears of the market, because these zones are only drawn when the market is in whichever the trend the market is moving. So here, as we took the short trade, we will wait for the indicator, the psychological TP levels indicator, to turn from red to green. As you can see here, the point where we took the trade, it was green. So we'll wait for it to turn red, and then after that we'll close our trade as soon as the indicator turns green. As we can see here, this happened here. So we'll wait for the indicator, we'll keep our position open until the TP levels indicator gives a signal that now the color of this area has turned from red to green. So we'll close all the positions that are in short direction or in bearish direction. So this happened here, and let me just go ahead and draw a level here. So here we can see that they're at the close of this candle, we will close our trades. And if I just go ahead and calculate the exact risk to reward ratio that we got with this trade, it's almost 19 risk to reward ratio. So this is very phenomenal, and this is the beauty of using the supply and demand indicator in combination with the psychological TP levels indicator. And if you look at this trade as well, this also went into the profit, because we would have closed this trade as this opened in the red area, and we would have closed this trade at this same level. So using this strategy, you can also trade in gold using the supply and demand indicator. Now the other indicator that we have talked about is the order blocks indicator. And if we go ahead towards trading strategy for order blocks, is that whenever there is order block formation, there will be a ranging market, and then after that the market will give a very impulsive move in either bearish or bullish direction depending upon the type of order block. So the order block zone will be drawn at the highs and lows of that ranging market structure. And if for that we can either detect this manually, and we can also use the order blocks indicator. And the link to this order blocks indicator I have put in the description, so you can check that out if you're interested. And if I just forward play the market, so as soon as this order block was formed, the indicator will send us real-time notification through email and also through desktop. And if I just wait here, as soon as the order block formed, we will put our short position. We'll put our short position here, entry here, and stop loss here. Now in this, we'll wait for the market to return to this order block zone, and then from there we'll target our take profit level. So if I just forward play the market, and here we can see that there is this formation of swing, and after that the market is moving in the bullish direction. So from here, from this very candle, the market picked our entry, and now the market is moving in the bearish direction. So we will wait for the market to move in the bearish direction, and while it's moving, we'll target this swing low as our take profit level for this bearish order block. If I just forward play the market, we can see that the take profit level was also hit, as we can see here. Just about here, the take profit level is achieved. And this is the strategy for using the order blocks indicator. You can check the links to the indicators in the description of this video. And also another thing that you should keep in mind while trading with order blocks indicator or supply and demand indicator is you should use them with a proper strategy, and those proper strategies are explained with the materials or the content that you get when you subscribe to the indicators. And those contents include a video guide bundle and also the detailed PDF guides which you can use in order to understand the supply and demand indicator and order blocks indicator strategy in detail. I hope you liked this video. If you have any questions, please comment down below and I would love to answer them. Also, don't forget to like, share and subscribe. See you guys in the next video. Thank you.